the Stock Market Morning Prep video for Wednesday, October 22nd. Markets had a real nice day yesterday, and actually the volume was a little bit better than the previous day, so that's not a bad thing. Dow Jones was up 215 points, Nasdaq up 103, S&P up 37, and Russell actually gained a little over 1.5% yesterday, up $17.88. So that's not bad. So where do we go from here? Are we just headed right back and challenging the highs? Not quite. Again, I'm going to show you the volume. Volume was a little bit better, but we're getting into the sweet spot, meaning that where the markets should fail. Remember, should. That does not mean that they will fail. We had 4 or 5 good days up, again, on very, very low volume. Yesterday was better than the other 4 days, so that is a good sign. Russell actually did well, at least hanging in there. Instead of diverging from the other 4 indices, that was okay. We had technology do really well yesterday, and of course the transports did well, and that's what really helped this market yesterday. If you looked at all of the 5 indices and you do your analysis on all 5 like I do, you'll see the analysis work that transports definitely outfavored the other 4 indices, and that was the help of UPS yesterday. So, but that's good. That's what we want to see if we are bullish on the market. Now, right now, I do suspect that the markets will at least roll over and challenge the lows, and I don't mean it really getting there. What I mean by challenge the lows is that we put in a higher low from the previous low of this October. So, and if that does happen, then I think that you're going to have a real decent move coming November, December. Now, I'd like to see that be challenged, because if that does happen, you will see buyers of dips come in, and of course fund managers start chasing year-end performance, and that's what I want to look at right now. So that's why I'm only looking at the analysis of the indices. I want to keep it clean. I want to keep it really simple. Okay. All right. Let's dive right into this. We have the daily ES, and what we have here, and what I did was do a Fibonacci retracement from high to low, and we are now looking at a 61.8% retracement, where we're right there. That's that golden ratio where everybody looks at that does Fibonacci analysis. That does not mean we can't get back up to that 1970. So what I mean as far as being the sweet spot is I like this area here for a possible failure. Now, and what do I mean by that? And I say that all the time. I mean that the markets can actually pop up into this area. Does that mean that we sell the market because price is there? Absolutely not. What we need is now a reversal of the candle. Okay, would it be a reversal candle, a hangman, a doji, and then we need to actually take that candle's low out. And if we do that on a closing basis, we know where our stops, we identify our risk, and then we look to enter the market short. Okay, and that's what I'm looking for. So it does take a little time, but we'd rather be safe than sorry than just go out there and look to short the market while the market is indeed starting to move higher. Okay, so anywhere in this area, this 50, well, we're at 35 right now, 40. So 35 to anywhere in that 70. It is a little bit of a wide range, but that does not mean that we can't get there. So let's pay attention to price, pay attention to what volume is telling us, and let's see if we can get in there. But we have these moving averages that are now reacting to a little bit of resistance. Just quickly, in the overnight session, we did have a lot of the Asian markets do very, very well. And then Europe came online and really started smacking the markets back down again. And by doing that, we're in the red again. So it's a little touch and go here. So let's see if the markets can recover and push yet again right into the zone area. Okay, let's take a look at the 4-hour chart, and you'll see where I'm saying that 1970 comes in real nicely. As you see, this is all of the supports and some of the resistance areas that we had previously that I leave, and you can see 1970 comes really nicely into play. So I like that 1970 area. For some reason, it looks like I think that's where it might want to go. We have the 200 right now. We're sitting on top of price. So even if we come in a little bit, maybe we sell off today, tomorrow, and then start to pop up yet again Friday going into next week. Remember, markets start to stabilize. Even though we have a volatile October, and usually we do, markets put in a low in October, and then they start rallying into November, December. And what I'm going to do is I'm going to put a weekend, and if not on Monday, some seasonal trends on what to be looking for on the going into November, December as far as sectors are concerned. So I'll put that little video together for you. It's always interesting to see. All right, now we have the diamonds. Nice move up. But you can see diamonds are lagging, right? And it should lag. It is a lagger of the other indices that we follow. But you can see volume a little bit better than the previous 3 days. And again, we're coming into moving average resistance. 61.8% retracement comes right in here, nicely under the 50-day moving average. So that's going to be the target really for the diamonds, as well as we had the target for the ES a little higher because ES just had a little bit more push to the upside. So it would not surprise me if the diamonds start to fail here in this area. Okay, and don't forget we had a little bit bad news from Coke, IBM. That's going to put a lot of pressure in the Dow as well. But the Dow, if you look at the overall numbers, really shook it off and did quite nicely. 1.3% on the day yesterday. I had a nice question. One of the viewers of the stock market morning prep video called and said, when you're day trading and you get these gap ups, what do you do? Well, you have to look for trades, and if you have a trading system or a trade setup that you follow, and if you do not trigger, unfortunately, that's what happens. There's no need to force a trade. If you do not get a trigger, let it go and just wait for the next setup. And unfortunately, don't change your system because you're not doing any trading. That's what it's telling you because it has not met your criteria. You know what I mean? So I hope that helps. All right, IWM, same thing. High to low, Fibonacci retracement, 61.8% coincides beautifully with the 200-day moving average. We're just getting back underneath it, and I really think that's where it might really kind of sit. And if we do get anywhere higher in this area, it would be that 78.6% retracement. So there's going to be your sweet spot right here, guys. Here. So we're looking for the sweet spot. Average volume was a little bit better than usual the last 4 days, but this is where it's going to be do or die for the markets. Now, if the markets can break out of these areas of these sell areas, if you will, and then back test that as support, then I think all bets are going to be off to the downside. So this is going to be critical 3 to 4 days of trading, and we're going to see what this market really is made of. And if it does break out and then back test and then creates this area of support, then I think that all bets are off, and we're probably starting to head higher. Okay, so this is why this little area is going to be critical for all of these identifying these little areas of resistance, of failure, where I would suspect the markets were to fail and start to roll over again. Okay, transports, explosive move, and that is on huge volume, and that is why I say look at the indices. If the transports are moving higher, then that's exactly what you want to see. And you could see the transports really have gotten decimated for 4 or 5 days. We hit that target. We hit our target line and exceeded our target line. We exceeded that 1272 to 200 to 1272, and we didn't quite get to 1618. But 10-15 cents is pretty close to for government work. That's for sure. Now we're into this channel again. Okay, this is a good area where you want to be looking at to see if we fail. All right. Now remember, this is the main leader here. So if we start to break down and fail, then that's something that we're going to have to pay attention to. But big volume yesterday, big accumulation. So to me, this is really, really good. And if the transports hang in there and hold in well, and if we have the IWM hold in, and then we have the Qs, which I'll show you here, did really well, then I don't think you're going to see much more downside here going into the end of the year. So remember, guys, that's why I said when we would come into this area, it's really, really tough to be short, really tough to be long at the moment until we stabilize. And look what happens. You get 3 days of gap up, gap up, gap up. Kind of kills the day trade unless you see something that's spectacular. This is difficult when you have these gap up days like this. However, now we're coming into some really good areas, key areas of resistance, and that's what I'm going to be paying attention to. Okay, so I hope it helps. Keep an eye on those resistance areas, write them down, put your alerts out there, and let's see what happens in the next coming trading sessions. We'll see if the market, see what the markets are really made of. Have a great day, everybody. We'll speak to you tomorrow. Take care.